So in this video we will be focusing on what is technical analysis while we are picking up stocks or we are reading up the data before putting up our money into the stock. So technical analysis is one of the analysis which help an investor to make a decision according to the price and patterns, uh, which is a study of the past prices and patterns, so that we will be looking at what context or what tools are we using in this, and what are the types of candles we will be looking at, multiple candles, single candles, what are the types of market trends we will be looking at. So hence we will be having a holistic approach. It will be uh, it will be a series of video you will be seeing, and throughout the video we will be covering various points. So before moving to analysis, let us talk something about what is a market, what is the stock. So here we take an example. So if we talk about market, this market is for buying and selling of securities we are talking. So market, if you talk in a layman language, it is where a buyer and seller comes and trade. Now the trade could be in commodities as well, and that trade could be in securities as well. So the market, the stock market that we are talking about, it is the trade or the buying and selling of securities actually. So while we trade or while we are into a market, what would be our main goal is to earn profit, right? So through technical analysis we determine, or we take the past records or action, and we define what could be the patterns, so that we can counter our approach while we are trading into the securities in the market itself. So what happens is that companies often, for their long term capital requirement and short term capital requirement, they want money, and for that they uh, come to this market, they sell off their securities, the people buys it, and they get the money so that they can fund their long term and short term requirements. Now those requirements, if we are talking, we are not going depth into this because we already have such videos in which I have already taught what is debt capital, what is the equity capital. So we are not going deep into it, but just for a primary related concern, that if I wanted to buy assets, I'm a owner of a company, my company is listed already. So if I wanted to buy long term assets like land, machinery, so what I will be doing is I will be needing long term requirement, long term fund, fixed capital for the fixed capital requirement. So for that, if I am new to the market, if I haven't been into the market, I can list my securities, that is I can offer for sale those equity shares that I have. That means the whole capital of my country is divided into equal parts, and each equal part is known as a share. So if someone buys my share, they will give me some money, and in behalf of that they become my shareholder. So they will be, if they are equity share, they will be having voting rights, they will be having they will be sitting in the meeting, they will be having various rights, they will be having dividends as well. So we are not going into depth. There are a lot of shareholders, types of shareholders. We have preference shareholders, and well, there are a lot of them. Second way is that you are not going into the market, that is a different approach, but going through debt, that is you are not diluting your equity, but you are taking in form of interest. You pay a fixed amount of interest, and you also pay a lump sum at a particular extent of the tenure of that debt. So that consists of loans, debentures, etc. So we are not talking about short term capital requirement, that is done in a money market. Here when we are talking about market, there are two types of market actually. So we are talking about two types of market. So here we are not talking actually, but there are two types of market when consist of securities. So when we are talking about market, here we are talking about stocks. And when it comes to stocks, that means long term stocks or the capital market. We also have money market, that is for short term securities. We are not going that way because that is controlled by RBI, and it has different provision, different instruments actually. So our focus will be on technical analysis for now. So this is a brief description. Now we are moving ahead with technical analysis. Now technical analysis, and there is one more thing which is known as fundamental analysis and fundamental analysis. We are not going into fundamental analysis, but let us have a small difference between them so that we can have a more clarity of thought. So while we are talking about fundamental analysis, these are two. First of all, these are, while we are investing into the stock market, it is essential for the investors first of all to know certain tools that will help them to make informed decisions. And this fundamental analysis and technical analysis are two such tools to approach the market, but they differ, right? So fundamental analysis looks at the intrinsic value of the security to determine its worth, while the technical analysis focuses on market trends and utilize past data to predict future. So it's like the fundamental analysis is a method to evaluate a security by assessing its underlying financial and economical factors that affects its value, like the macroeconomic factors that you can take up, or whatever we are talking about, like derivatives. It uses the underlying asset value in some way. We have the fundamental analysis as well. So it is like fundamental analysis starts by analyzing a company's financial statements, including income statement, balance sheet, and cash flow. So if I give an example that with this I am new to suppose I am new to a stock market, and what I do, I'd wanted to invest in a company. Let make it very layman. Reliance Limited. Okay. Now instead of going to previous past data, like today is 2023, I'm not checking the past data, like how well he performed in the, it's July, so June, we are going back, so May, April, how it performed. We are not taking that, but we are taking that how is the income statement, how is the health of the statement, P&L, balance sheet. We are checking this, we are checking cash flows, that how well they are, whether they are healthy or not, and we are making decision that we should invest it or not. So here this is the fundamental analysis. Where technical analysis, we are looking at past data of that stock movements. Like if I am investing in Reliance and I am talking about financial analysis, then I will be looking at the 3 or 4 months data. Suppose that how well this chart this security perform, like as it was low then high then low then high, then I can make a decision that at this point of time what should I do. Shall I buy or shall I sell if I already have that share? So we will be looking at the technical analysis in depth. So technical analysis, when we are talking about the most famous tool which is used in technical analysis, first of all we will be looking at something that while we are doing a technical analysis, there are some things that you should keep in mind, like history tends to repeat itself. Like I give you an example, this is like speculation. We are saying that what is happening today will be also happening tomorrow. If I take of this season 2023, when the winter will come, the AC conditioner, air conditioner sales will lower, right? Because in the north especially, if I'm talking about, because no one is going to buy air conditioner because it's cold, right? And air conditioner works is to do the cold. So the demand of the AC in winters will go down. Now what if when the demand is low, that means prices will also be low at that time. I will do a buy, and in summers, this is in winter, when demand will be high, prices will also be high, so I will put a sell. This is how trade also done. We are looking at market forces, demand and supply, and then we are deciding that whether we should buy or sell. This is also happening in a stock. Now this thing is repeatedly in nature, because summer and winters are inevitable, they will be coming up, right? So when demand is low, prices will be low, you do the buy option. When demand is high, prices will be high, you do the sell option. This is something which always tend to repeat itself. So the history tends to repeat itself, that we have learned. Now second, Now here I'm taking market trends. Okay, so for this trends, let me just a second. So for this, to understand this trend, let me change the color. Okay, now there is three types of trends that we see while we are analyzing. So this is such kind of a market. The here how it is performing. Now if we see here, I'm dividing this into three. Here it is started from here, then it went here, then it got down, then it went more up, then it got down, then it more up, then it got down. Now if you see, it is upward in nature, so it's a upward trend. Now in upward trend, what is this? This is low and this is a high. Again this is a low, this is a high, again this is a low, this is a high. Now in this upward trend, what we are seeing, that this low, this low is higher than this low, and this low is higher than this low. That means we are looking at higher lows. All right, the laws, this is low, 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 right? So the low which we are looking at, these are higher, these are low, but they are higher lows. Now in this this is sideways trend. In the sideways trend, it is consistent in nature, not going up, not going down. Okay, here lows and high all are consistent. Now in this last, it is a downward trend. Now in this downward trend, what we are checking, that this is also low, this is also high, this was high, this is low, this is high, this is low, this is again high, this is again low, this is again high, this is again low, and this is high. This is how it continues. Okay, now what we are seeing, that these are low and these are high. Now this continue, just focus on these highs. These are highs, but they are lower highs. Here it was higher highs, but lower were also highs. Here highest are high, but they are in lower segment, they are in downward trends. So in downward trends, you see highs, but they are lower highs, and in upward trend there are lows, but they are higher lows. That means at every segment of the part that we are looking at, they are low. If you see, this is low, but this low is higher than this low. Here this low, this one, if you are talking about this low is higher than, is lower than this low. Now this is lower than this low. Simultaneously, this high, we are talking about this high is high, but it is lower than this high, and this high is high, but is lower than this high. This is how you determine the market trends. Okay, now third, market discounts itself. We are talking about trend analysis itself. So market discounts itself means, so market works on greed, and market works on emotions. Actually, if we are talking about trend analysis, it is also same in history trends too itself, that we have a greed that in winter we will be buying ACs and will be selling in summers. So it's a greed, right? And it's an emotion as well, that in summers the demand will be high. Now speaking of a fact, that here what we are speaking up, that market discounts itself, that clearly means that right now you can see in some companies some news comes out, like if I talk about Reliance, some years, I guess some months previously, there was the news that the Reliance is net debt free. That it is a good news, right? For any company who is debt free, it's very good news. And also we are seeing that Facebook is investing, Google is investing, Microsoft is investing in Reliance, so it is a good news. So what you find at that time, you would find that the shares, wait a second, at that time what you would notice that when we hear a good news of a company like this one, we see an upward trend. We see a upward trend. Okay, now this upward trend, what happens is, this is not very consistent. This is something which happened. So market is moving like this. It is consistent. Suddenly a news came and it shoots up. It shoots very drastically. Okay, now what happens is, this is something which is short term in nature, and this will be discount by itself. Why? As it is very high, people will predict that this share has already reached its maximum high. So the news will come and people will start selling off their securities, and again it will be coming back to its same position. So here and from here, market discounts itself. Markets have put into the position that they are on before. So this is how it works. Now we are moving ahead with the further analysis. Okay, now we are talking about candlesticks, which is very important. So candlestick is one of the way to do a technical analysis. So what is the technical analysis? Technical analysis means you are taking the past data of that share, particular securities, and analyzing the past data and the patterns that they have made. You are taking decision right now that whether you should invest or not. So analyzing those past data becomes easier when you study candlestick. This is a way to analyze the past data, so that we will be looking ahead. So let me tell you something, how first the candlestick looks like and what are the parts of it. And it is similar that what we have drawn right now, the upward, downward and straight trend. Okay, so candlesticks looks like this. Wait a second. Okay, fine, it's fine. Okay, so candlestick looks like this. Wait a second. Okay, now it's fine. Now this is a candlestick. It has this thing. This is also known as wink. This is also known as shadows. Okay, so it is mostly known as wink. Now the market starts at 9, ends at 3:30 every day, or weekdays actually. So when the market starts, it has a opening position, and when market ends, it has a closing position. Suppose Reliance share today 18 July, suppose, and Reliance share at 18 July on the 9, it opens at 100 rupees and closes at 150 rupees, suppose. So this 100 rupees is opening price and closing is the 150, that is closing price. Simple. There is no rocket science into it. Now what happens is, this opening and closing, suppose it opens at 100. I'm taking an example that it opens at 100 and it closes at 150, suppose. Okay, now this, what is this and what is this down one? This means it goes more than what it has opened, and it goes very down, but then it recovered and came here. Okay, now when we are speaking of this, when open is at 100, so we say open is at 100. Why I'm making down, I will let you know. And we say the closing is at here, which is 150. Now understand, here it went more than 150, touched here. Here what happened? here it shoots. Here the price was high, that means demand was high. As the prices were high, people sell off, and when people sell off, supply becomes high, demand becomes low, prices down to here. Okay, in the same day it went very down to which it was open. It went very down to which was open. So we are assuming it was open at 100. It went very down, like it went to 70 suppose. As the prices are low, that means what, demand will shoot up and it will come back again. Prices will be restored. This is how discounting works, right? Market discounts itself. Now why we have taken open here and close here? This is first of all a green candlestick. Let me tell you about two candlestick. So this is a green candlestick. Okay. So there are two kinds of candlestick, red candlestick and green candlestick. So if I'm talking about red candlestick, suppose this is a red candlestick. So first of all, this is a bullish one and this is a bearish one. What is bullish, what is bearish? When markets are prosperous, prices are high, stocks are high, it's bullish, and when market is down, there are red candlesticks, it is a bearish market. We are not going down there. This is a red candlestick. In a red candlestick, you will always see opening as up. Opening suppose 150 they have done, but closing down at 100. Okay, whenever a price has opening of higher but closing of low, then you will see a red candlestick. Now if you check here, this wick is high, this wick is low. That means as it was open on 150, it went more up, like 200 it went. 200 rupees it went. However, here it was higher price. That means people sell off their securities, so supply become high, then demand become low because people are selling now instead of buying it. So demand become low, so price is restored again to here. Now it went more down. It went more down. It went so down that it also crosses the threshold of its closing price. We are supposing that this is a closing price. So it went here. It's suppose 70. Suddenly, as the prices are less, demand will become more. Okay, and supply becomes short. It will restore itself, but it cannot restore itself that it comes up here. So it closes here. Market closes and closes up here. So it makes a red candlestick. That means open at 150, closing at 100. So it's a red candlestick. What happened here? It opened at 100. It went down to 70, but again the demand shoots itself so much that it exceeds the opening price and went to 150, even more. But again यहाँ पे people sell off their securities and then it come here and close it at 150. Still it is more than, as it is more than opening prices, it is 100. So we are considering as a green candlestick. This is the two types of candlestick that we are learning. Now here one more interesting thing. So if I make two candlestick here, so this is a red candlestick. It is not actually red, but let's suppose it's a red candlestick. Okay, and then we have wings up here. Okay, so whenever we see a red candlestick, we say that it is opened at up and closed at down. Okay, this one it's low, this one it's high. Now as it closed here, the next day opening will be here. The next day opening will be here. Now it is up to the market whether it will go down or whether it will go up. Okay, so we are supposing that the market was very bad for this company and it goes more down. It goes more down. So it was like very worst. So it's opening at the last day closing, which is already low, but then it closed at more down. Suddenly what happened, as it is going very down, the prices is down. If the prices are down, demand will be more. Suddenly what happens, a good news also come for a company, let us suppose. So what happened actually, that so here I am supposing it's a closing. Okay, now what happened is it took a lead. How it took a lead? Because anything could be happen, right? The company has some new what you say, policies which are favorable to the market, or there is a news that they have a good balance sheet, healthy balance sheet. So there are many things, right? So it's a, suppose this is a very bad draw. Let me draw it again. So it is close it here but opening it here, I'm supposing, and this is supposed like this. Now what we are seeing, I will let you know, this is also a multiple candlestick example as well, so we can clear it out from here itself. So this is high, this is low, suppose we are doing. Okay, now what we are seeing it here, that opening was here and closing was here. This is the high, this is the low. Okay, now what we are seeing, that whatever losses that it made before, this candlestick engulfed this losses. This is a engulfed candlestick which we will be seeing in the multiple candlestick examples. It can also be opposite. Suppose this is the profit at this is a green candlestick, but this could be a red one. So this is a bearish engulfment, this is a bullish engulfment. Here what happened is that here the market is opened at low, but some good thing happened and it becomes more high. Now at the next day it will open here. Now it is up to the market whether it will go up or more down. It is up to the market. This is how you check. Now what we are seeing it here, if the market is going down, what we are seeing, that as the prices are low here, because it's going down, the demand will be more and it will go more, unless there is some atrocities like we are seeing up news, it goes more down. However, this is a general basic example. So here it is more bullish, the prices are very high. If the prices are high, people will sell their position, again market will go down, again up, again down, again up, again down, and in this way there is a candlestick chart will be made up, which I am going to show you right now. Just a second. Just a second. So this is, I'm going to show you a real life how candlestick looks like. Okay, so this is how a candlestick looks like. If you see here, this small candle that you see, this is known as doji. Okay, now I will be explaining it more in further, because it has a similar two wings and a small, because we see more highs and more low, but opening and closing is very short. So here if you see here, it opens up here, close up here. Now on that same day, now you will say why it haven't opened here. If I zoom it out, it should open here, but on, because I told you the market closes at 3:30, the 3:30 to 9 a.m. of the next day, if I'm supposing it's a working day, it gapped up till here. So it does not mean that if market is closing here, it will be start opening it here itself, because at next day it has a lot of difference hours, right? 3:30 to 9 a.m. is having a lot of gap in that concern and people can buy, but it is transacted at the next day when market opens. So it gapped up here. Okay, then here it opened, it went this much high, and then it closes as it goes this much low, but then people put a demand and it comes back to here. Wait a second, let me zoom it out. Yeah, okay, now if we check here, as the market goes, here it closes, here is open, here it closes, here it opens, here it closes. Now if we check more into this, this is a downward trend, if you see, right? If we take suppose, let us take different one. Okay, let us directly go to images. Okay, this one, this is good. Now here if you see, this is a doji candle, and then you will see that there are greens and it is going up, but it does not mean it should go up. Let me check a real time example for you. Right. This is good. Now see here what is happening. Here it opens up here, closed up here, it went this much high. Now this, it should open up here, right? But this is gapped more. It's a doji candle, so it opened up here, closed at here, then it gapped very big. This is gap, a big gap, right? Then it opened up here, closed up here. Now it opened up here, a bit small gap, but closed up here. That means any news or any search or people sell off their securities. Then it closed up here, more gap. Then we are seeing that it went this much low, but then it covered, so it closed up here. That means if you check here, this is very good one, that I show you. Yeah, this one. Now it is a close. Okay, this is a close. It should open from here. No, it opened from here. That means this day's close opened from here, very down, open for more down. That means suppose it is 100 rupees here on this day 11th May. On the 12th May it followed when the market opened at 50 suppose, but the market did what? The market covered its position. It got more down like 20. See, if you see 2458 it shows. So it closed it at 2748. It got down to 2469 of next day. It opened at 2469. So 2748 2480, sorry, 2480 was the closing on the 11th May, and the opening should be also this, but the people sell off more in that closing period, and it opened at 2469, which is very low than the previous day closing. But the market went more down. It went to 2456, but somehow it manages to cross the 2479, and it went to 2484. That means it covered the loss that it has and also a loss that it had previous day. Okay, then it had a gap. Okay, now if we see, this is a closing 2484. Okay, it opened up here 2488, which is a good gap. Sorry, here 2489. Then it fall, it go more high, more low, and closes up here down. That's why it's red, right? Because the close is down, so it closes at this. Now again on the next day, what happened? It closes down. Now if we check this one, this is its close. Okay, its opening should be here itself, right? But what happened? It opened up here. This is a red candle. It's open up here and go close, it will be there only. That's why it's a red candle. So it open up here, good gap, but then again it down. Okay, again it next day it tried to recover, then it down, tried to recover, it down, Next day it open up here, recover, open up here, more recovery, open up here, like good gap, but well, people sell it off because demand and supply. So here we see a big candle. This is a good gap. It's open up here, closing up here, but next day if I see 26th, it opens up here. It closes at 2439, opens at 2457. Very good. And it closes at 2505. This is how you do the trend analysis. Okay, this is how you study the candlesticks. Now one more thing which we have to see, that there is a support and there is a resistance. We have to check. This is very important. So let's go back here. So I have explained you that this is okay, this is something like this. Now what happens is, let us take this one example. Forget about this. Where is the black color? Here you go. So suppose this is a chart where the prices are up, down, up, down, up, down, up, down. Okay, but if we see that prices are not going lower than this, not going lower than this, not going lower than this, and this is very consistent. This is very consistent. This is support. Now if we check again, it goes up, then goes down, goes up, goes down, goes up, goes down. But here, just forget about this. Suppose this is only this much. Here it is not moving ahead of this, not moving ahead of this. It comes at to this position, again goes down. It comes at this position, again goes down. It's not going more up, it's going down after this point. Suppose this is a 10 point, it's going down. It's not moving to 11 point. This is resistance. When you are going up, someone stops you, it's a resistance. But when you are going down, someone stops you to go further down, it's a support. Okay, this is how you understand support and resistance. So this is it for this video. This is a big video that we have making up. Next video we'll learning about doji candle. We will learning about multiple candle like morning star, evening star, so have better clarity, and we will looking at more stocks to understand how do we do analysis. We will be looking at engulfing bearish and bullish like we have seen here. So for this video, thank you so much for watching. Keep watching our videos, and we will be doing this whole series so to have a better clarity on trend analysis. Thank you so much.